I made $1,000 last week on one single trade. I'm going to show you how I did that and show you the strategy that I used to accomplish that. So if you come over to this screen, what you're basically seeing here is a 15-minute chart. So what is a 15-minute chart? Well, every single candle that you see is 15 minutes. So this right here is the 9:30 a.m. candle. This is 9:45, 10 a.m., 10:15, so on and so forth. Now, when you look at your traditional chart, you're usually going to see what's called a daily chart, where each one of the candles is its own day. So this would be a Monday, this would be a Tuesday, this would be a Wednesday, so on and so forth. So that's the major difference between the two charts. Now, some people might look at this and say, well, this looks completely like Chinese to me. I don't understand what's going on. You have these squiggly lines on the bottom, you have these bars going up and down, and of course you have your candles that you just told me about. And you might be wondering, saying, how do I know how to break this down? Well, let's break it down right now. And I'm going to make this extremely simple for you. There's three major things that you look at when you're day trading. And we call this day trading because you're making the trade within one entire day. That's the entire day of the box I just drew here. You want to get in this thing at some point during the day. And by the end of that day, 4 p.m., you want to exit that same trade. This is not something that you want to stay in overnight and kind of see what happens the next day. So it's a little bit more involved, but it can be a very lucrative process. So the first thing that we need to look at on this chart, you may be saying, what is this big squiggly line down here? Well, this is your trend. You may hear me say, the trend is your friend. If you follow the trend, you're going to do well. If you deviate from the trend, you're not going to do well. It's as simple as that. So this red line is my percent K. It basically smooths out the trend or the stochastic or the average that the stock price is moving in that moment. It combines volume with it. It combines how many shares are being traded, which is overall the volume, but it says the direction that people are going on this thing. And it kind of pushes you see, as the trend starts to move up, as that red line goes to the positive direction, what happens? Well, the stock price follows it. And the main rule here is, for when you buy, it's a question that everybody has. It's probably the question that you have. When do I buy? Okay, the trend is moving up. It's when you cross this red horizontal line. When you cross over 80%, that's what I call the sweet spot. It's where you have the highest probability of making money. And that is the whole goal of trading. How do I give myself the highest probability of making money each time? You're not going to win every time, but if you want to win, you have to lose at some point. The goal is to make those losses minimal and to capitalize on those gains and let the winners run. So now that we have our trend figured out, the next question that people will say is, well, what is this right here? And that's our volume. That's the amount of shares traded. And in this instance, it's the amount of shares traded in a 15-minute period. Each one of these volume bars is 15 minutes. So 9:30, 9:45, 10 o'clock, so on and so forth, all the way to 4 p.m. at the end of the day, 3:45 to 4 p.m. Once you notice that we have this yellow line here, that's the average volume. So it's going to take the average volume of that day, and it's going to draw a line. And that gives you just some type of relation to, do you have a lot of buyers coming in? Do you have a lot of sellers coming in? You can see down here, we have these three volume bars that are under that yellow line. That just means there's not a lot of volume coming in during that 45-minute window. Then you notice volume came back up, and towards the end of the day, where I actually made all the money, there was a lot of volume. Notice I said where I made all the money because volume drives the market. You may say, why is volume so important? Think about it this way. Volume is the gasoline that goes in your car. If you don't have gas in your car, you're not going to make it very far down the road. It's the same thing with a stock. If you don't have volume, you're not going to make it very far down the road. You're not going to be able to get up the hill. And the hill is let that stock price climb. So now that we have those two things down, we need to look and say, well, when exactly do we buy? That's probably the big question that you have. That comes down to the shape of the candlestick. So you have some candlesticks that look relatively weak like this one. Then you have a candlestick right next to it that looks pretty strong. It's big, it's thick, it's full. There's a lot of buyers in that one. There's not a lot of pushing and pulling. What do I mean by pushing and pulling? There's not a lot of people on this side saying we want to buy the stock and people on this side saying we want to sell the stock. So when they just start this tug of war, the stock price kind of just sits there. If these guys are more strong, they're going to pull the stock price. These guys are just going to kind of go away because they're like, we're not going to fight the strength on this side. We're just going to drop out. You let the stock price go higher. And that's kind of the analogy that you can think of volume as. And the candlestick will follow that, meaning you have an engulfing candlestick. So an engulfing candlestick is a candle that is larger than the previous candle and bigger and higher in price. It takes out the previous candle. So that's what we look for a buy signal. But we want all those three things to align. How did I make that $1,000 in just a matter of a day? Well, I put forth 2,000 shares. This was 2,000 shares of LABU. This is a 3-time levered ETF. It's not something that I recommend that a new trader trade just because it's quite volatile, but the goal is to get to trading something like this. The more volatile that a stock is, or the more volatile that an ETF is, the more opportunity you have to make money. But if you don't know what you're doing, the more opportunity you have to lose money, and that's not what we want to do. So I bought this thing. I bought 2,000 shares at $8.06. Now, why did I buy that? Well, I saw a couple of things going on. Remember, we need to be above this area right here, above 80%. So we were above it. Do you just buy? You're probably thinking, do you just buy because the line crosses 80%? No. You notice that we crossed 80% and we were right here. I'm not buying on that. Remember, we want to have those engulfing candlesticks. Did I buy here? No, it really wasn't the best candlestick. And plus, look how weak the volume was down here. So where did I buy? I bought on this candle. Remember, we were above 80%. I actually had good volume coming into the stock, and I had a really nice engulfing candlestick. And you're probably looking at that saying, well, Mo, there's a wick on the top. It looked like the stock price pulled back. That's always going to happen. You're never going to find, even this candle right here. This is one of the best candles that you'll ever find on a chart, and you can see there's like a 1 or 2 cent wick just at the bottom there. You're never going to find a complete candle. It's just not possible. Well, it's purely possible. Actually, I noticed one right here. It's just not very probable. You may see one a week because that means that the price is starting at the bottom, moving all the way to the top, or vice versa. So $8.06 we're in. Now, what do I look for here? This is where the easy part comes along. I'm just waiting. I'm in the stock. The anxiety might start. I might have to say to myself, you just have to follow your trend. The trend is your friend. Let's just let this trend continue to go sideways. And this trade worked out extremely well. Why did I think that why did I execute this trade? Because I trade the same stocks over and over. I exclusively day trade LABU and LABD. I'm actually looking, this is LABD in this instance. LABU is exactly the same thing, just going in the opposite direction. So as this one is going up, LABU is going down. And as this one is going down, LABU is going up. Very simple. So instead of shorting, I'm always buying. That's why I got a little confused there. It's actually LABD. So this is in the sweet spot, going sideways. And you can see it actually stayed above 80% all the way through the end of the day. And what did I look for? I was saying to myself, all right, we need to make sure that we're in this thing. We want to make sure, obviously, the stock price keeps going higher. And I want to make sure the volume stays there. Green buying volume. And you notice it dipped down a little bit. But what happened with those dips? Well, you had these two weak doji candle bars. That doesn't mean you panic, and that doesn't mean you do anything. You're probably saying, well, why didn't you panic there? You said that volume is everything. Well, volume is everything. But if you have volume and you have a stock price that's not really going anywhere, it's just kind of fluttering, you don't have to worry about it. If I were to have gotten some red volume coming in here, meaning selling volume, and this thing started moving down and the candle started moving down a little bit, then I wouldn't have panicked. I just would have exited because I know what I'm looking for. That's the idea. You want to see this, you want to have experience, and you want to not panic. But that would have been the instance that I would exit. So with this one, we're above 80%. Volume is fine. And then what happened about 45 minutes later? This happened. You started to get this increase in volume, and it stayed above that yellow horizontal line. You got some selling volume coming in here. After big runs like this for about an hour, you're typically going to see some sell-off. It's just people taking their profits. No reason to panic. As long as you don't get a big engulfing candlestick coming down, there's really no reason to panic. The whole thing about this, if you haven't noticed yet, I don't panic. I just sit there and just go with what the chart gives me. There's no reason to panic. Just because there's a monetary value on this doesn't mean that you have to exit and worry that I'm going to lose a lot of money. Stay calm and understand that you've learned the process. Be confident in the process that you've learned and just trust it. Trust the trend, trust the volume. And by the end of the day, well, this was the 345 candle, 345 to 4 o'clock. I actually exited in here. And the reason that I exited in here is because it was getting towards the end of the day. You notice how large this green volume bar was and how how weak this green volume bar was compared to the previous one, about half of the volume. And I started to get some uncertainty in price. You notice there's a wick on the top, there's a wick on the bottom, and actually later, the next candle, we kind of dropped in price. Now, you could have very easily stayed in this and just exited at 3:59 p.m. No big deal at all. You would have given back some gains. The only reason that I exited here, I just said, you know what? It's getting towards the end of the day. Do I really want to gamble that there's one more big green volume bar here? I mean, I was already up about $1,000 at this point. Why bother? So I ended up exiting at $8.61. So I went from 806 to 861 in a matter of, I don't know, let's see where this thing started. This thing started at 1 o'clock in the afternoon. I ended up exiting at 3:45 in the afternoon. And in that time, there was no reason for me to panic or exit. It was just sit back and enjoy. So the total amount that I actually made on this trade with the 2,000 shares that I had was about $1,100. Anybody that has the discipline to sit there and be able to control their emotion and understand what they've learned can absolutely do this. There is really no genius behind this. And you notice I only had 3 indicators. It's stochastic, volume, and understanding candlesticks. There's really not much more to it. My whole method behind what I do is keep it simple, stupid. I think a lot of people overcomplicate things, and there's no reason to do that. You yourself may have seen other YouTube videos or read books, and it's just complete overcomplication. I don't believe that anything involving money needs to be overcomplicated. It needs to be simplified. Pretty much anything in life needs to be simplified, and you will do well. To join me on a regular basis with this, join my Patreon. It's $25 a month right now. There's less than 100 spots available. You'll get access to all of my live streams. You'll get access to me. You'll get access to the other traders, and you'll get access to me trading live and kind of doing this in real time. Unfortunately, this one wasn't a live trade that I did, but I always go back and always show people in the community the trades that I made if they were while I'm not on camera. So $25 a month, come and join us. So this was a small trade where I made $1,000. I have another video where I show you how I made $365,000 in one trade. Go watch that right here.